Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra and we have a lot of queries to get to. But before that, a quick look at the markets, which has been holding up very well today. Even right now, we're seeing a 100-point gain on the index, slightly below that 19,800 mark, but it's been a pretty steady session for the markets. The banks have come off a little bit in the past few minutes. That's definitely something to keep an eye on. Right now, the Nifty bank is trading with gains of just around 0.2%. So you can see that there's been a sharp slide in the Nifty bank. We're at the day's low as well over there. What's holding up well today are some of the stocks from the broader market, specifically the small cap stocks. So that index is holding up well. Mid caps also pretty much in step with what's happening on the index, but there has been a little bit of a cooling off there as well. Advanced decline still very positive. It's over 2:1, but earlier in the day we were at 4:1. So there's definitely a little bit of cooling off that we've seen in the mid and small cap space. Let's get to all of our queries then. And first of all, let me invite our guests on the show. We have Rajat Bose joining us, as well as Shahina Mukadam to answer all of your questions. Rajat is going to be looking at the technical side, and Shahina will, of course, give us her fundamental perspective as well. Rajat, Shahina, as always, thank you for joining us on the show and taking out the time for all of these queries that have come through. The first query is someone who holds 100 shares of Cyient, which were bought at 13.45. He also has 50 shares of IndusInd Bank, which he bought at around 1190. Now, he says he's a long-term investor. He wants to know whether he should hold this stock, both Cyient as well as IndusInd Bank, or whether he should sell and sort of get out of these names, maybe look at something else as well. Shahina, coming to you first on Cyient, take us through what you expect. He bought at 13.45. The stock is currently over 1,700. So some money has been made and this stock has seen a very good run this year as well. Do you think there's more to go? And we also have the earnings season starting. So ahead of that, how would you position yourself?
I think Cyient is one of the, still attractively valued despite the run-up in the mid-cap companies for IT. So I think, even at current levels, he can continue to hold, especially also that Cyient has more than 66% equity in the demerged company that is recently listed. So to that extent, there is value there also. Continue to hold. I think the numbers for all IT companies are likely to be subdued for the quarter. So I don't think Cyient will be any very different. But at the same time, I believe that, this current 1 to 2 quarters will be the bottoming out. So IT looks good for the overall sector and Cyient especially in the sector. As far as IndusInd goes, I think it has been like, if you take a very long term, it has not been a performer. But in the recent past, I think the management is getting its act together. And we've seen a better performance in the last couple of months. I believe that at current valuations of 1.7 times book and also the refocus, on improving the margins on the NIMs, I think one can continue to hold even IndusInd Bank. You can hold it with a stop loss.
Okay, got that. So that is the call on both Cyient and IndusInd. Rajat, coming to you, and once again, let me start with Cyient with you as well. This stock has seen a huge run up, right? If you look at it for the year, it's up over 100%. How are the charts looking right now? Do you expect that this kind of good momentum will continue?
There is a possibility that good momentum might actually continue, but then I would say that the investor would do better to actually book part profits if it were to fall below 1560. And it should have a final stop loss around, say, 1400. But otherwise, I'm definitely in agreement with Shahina that one can continue to hold, despite the fact that it has actually been posting all-time highs a few weeks back. But still, it has not really fallen below the 9-week moving average, so the uptrend is quite intact. So the closest stop loss is, 1560, and the farthest stop loss will be around 1400. I would also give a hold. Regarding IndusInd Bank, what I would say is that if I were in the investor's shoes, initially I would look at levels of around, say, 1400 or say about 1390 kind of levels for my stop loss. And if that stop loss gets hit, then I would like to exit the position at least partly. And by any chance, you should not be continuing to hold the stock if it were to fall below 1350. Another thing I would like to say, that bank as a sector is actually pretty much weak. It is going in tandem with the mid-cap index as well as the Nifty 50, but the Bank Nifty has the least of strength.
Rajat, I'm glad you actually mentioned that. What are the kinds of levels that you're working with on the Nifty Bank? Because, we were discussing this on one of our earlier shows as well, that it's not been very consistent, right? You have one up day, one down day for the Nifty Bank. Even today, right now, there's been a near 270-point drop from the top. What are some near-term levels that we can work with?
Near-term levels, Pavitra, it will be, say, 44,300, then 44,000. That would be the this range, that 44,300 to about 44,000. This will be the first support area. But if it were to fall below, say, 44,300 and also caves in below that, then you should be expecting the recent low to be retested. And one stock, keep an eye on that is HDFC Bank. If it were to fall below 1,500, this stock is the weakest among the large bank stocks, and it can go down to test 1,400 levels. So HDFC Bank is a big, it has real big weightage in the Bank Nifty. So Bank Nifty's performance is to that extent punctuated by that. If you look at Kotak Bank, that's also distributing. So I'm not very bullish on bank as such, as a sector.
Okay, and believe me, we've all been keeping an eye on HDFC Bank and seeing what's happening over there. But Raja, thanks for taking us through those levels. The next query that comes through is from Megha Srivastava. She writes to us from UP. Now, she says she has 100 shares of Allcargo Logistics, which she bought at 50. So she's made a lot of money on this one. She's a medium-term investor, maybe from these levels, not willing to hold for too much longer, and wants to know whether she should hold or book her profits. Shahina, with this kind of a run-up, the stock is currently over 265. She obviously got in at a very good price. Do you think that this is one where you should get out? Because in the recent past, the stock has not been doing very well.
She should hold with a very strict stop loss, close to the current price. She's making good money. So that is why I would just recommend she can continue to hold, because you see the last quarter numbers were very good. And also, I think they have been raising funds through one of the companies that is again recently listed, their real estate wing. So to that extent, I think, the balance sheet is also pretty strong. At the same time, I think, keep an eye on the stop loss, because you have a lot of issues happening in the Middle East, as you've been covering also, and that could affect some of the business.
Okay, so strict stop loss and can hold for now. Rajat, what is your thought on Allcargo Logistics? I mean, at the highs, I think the stock was over 470, 480 kind of levels as well. So it's not done well in the recent past, but of course, she's sitting on good profits. What would you recommend to such an investor?
Look, if you look at the weekly chart, if you look at the monthly chart, then you will see the distribution signs are clearly visible. But yet, I would say that because we are seeing bounces happening, so book part profits, but keep a close stop of about 220. If you see on any week it is actually closing below 220, get out of the stock, lock, stock and barrel.
Okay, got that. That is on Allcargo Logistics. Another query coming in. This is from Raisha Agarwal, who writes in from New Delhi. She holds 20 shares of Bharti Airtel, which she bought at 250. So, well, that stock is over 950 right now. And she is asking whether to stay invested or switch to some other telco. Well, there's not too much in terms of what you can do within the telecom space. But Shahina, do you think Bharti Airtel is a good space to remain invested, considering that she's already made good money?
Yeah, I would think so, because now it's become more of a duopoly. If you're looking at short-term pure trading, then yeah, Vodafone looks very interesting. But I personally wouldn't recommend at all entry into Vodafone. I would stick with, one of the two telcos that exist now. And Bharti remains like a decent bet to continue to hold. While I do believe that in the shorter term, it could consolidate, because the run-up that we saw was on back of the improvement in ARPUs that they witnessed. So now I think that is not going to happen in the near term, and especially with Reliance, with Jio coming up, with the fiber, the Jio fiber, air fiber. So I think to that extent, competition is going to increase. But at the same time, I think Bharti is a decent hold for the longer term. So for long-term investors holding, continue to hold.
Okay, continue to hold, and she's already made very good money on this one. Rajat, your thoughts on this and your thoughts on Vodafone Idea and the kind of move that we've seen in the stock? Of course, I'm not sure you would recommend that, but just your thoughts on both of these names.
Well, regarding Bharti, I would say, despite the fact that it is hitting all-time highs, if I'm not mistaken, at least it is showing a lot of strength. It can continue, the investor can continue to hold it. And I would say that, yes, it is a duopoly more or less, because Vodafone Idea is not exactly a competitor of these two. The point is that I would prefer a situation where this duopoly becomes a cooperative duopoly, just as we had a cooperative oligopoly in paints. And that is, of course, getting fractured at the moment. But then in this cooperative duopoly, Bharti is a good bet and one should continue. What should be the stop loss? Is if the investor is making real good money, put a stop loss below 900 on weekly closing price basis and continue to ride the movement, upward movement.
Okay, that is on Bharti Airtel. The next query comes in, and this is interesting. Rupam Agarwal writes in from Kolkata. She holds 255 shares of Jubilant FoodWorks, which she bought at 693. So seeing a bit of a loss over there. The stock is currently at around 530, like you can see on your screen. And she wants to know whether to stay invested or book her losses and get out of this one. Shahina, ahead of the World Cup, do you think you would stay invested in this one? And how much of an impact do you really believe it can cause?
I think the third quarter numbers, going forward, are expected to be pretty strong. So, Jubilant is, one of the leaders in this product segment and will continue to do well. But I think it is pretty expensive. And if you compare it with valuations with I think, some of the others in the segment, like, for example, Westlife, I think there the valuation is also expensive, but it's a smaller stock, mid-cap. So I would prefer, so Jubilant is not my top pick in the sector. I would prefer one of the other competitors for investment. But if you're holding it for the long term, you've gotten it at a decent price, which this investor has not from my understanding. But if you are holding it for the very long term, then yes, I think valuations will start coming and looking attractive over a period of time, but not right away. So I think it's a nice switch to some other stock in the segment.
So what would you like to switch to, Shahina, if you could advise her? Are you picking burgers now?
Westlife, yeah.
All right, got that. Rajat, coming to you as well. What do you think? I mean, she's gotten at a pretty high level, that's the problem over here. But how is this one looking on the charts?
See, it is one thing to buy this stock between, say, 500 and 480 or 470. And if one has actually got into this at a higher level, then at the moment, unless 560 is decisively taken out, which is actually a strong Fibonacci resistance area. So if that is taken out, then the stock will move up. But otherwise, it will consolidate. But unless it falls decisively below 520, I think she or he should hold the counter, hold the position.
Okay, hold for now. That is on Jubilant FoodWorks. With that, it is time for a short break. But Shahina, Rajat, I request you to stay on. We have a whole lot of more queries which have come through and we want to get to all of those. But before that, here's a quick break. Welcome back. You're still tuned into Your Stocks here on CNBC-TV18, and we're going through all of the queries that you guys have sent in and answering them with our experts. We have Rajat and Shahina to take us through their call on these stocks. And we actually have a caller with us on the line. Ronak Rajpal is on the line from Hyderabad, and he wants to invest in Bectors Foods. Ronak, hi. Thanks for calling in, and tell us, why do you want to invest in Bectors Food in specific?
I'm a long-term investor, and I already have a portfolio of a few stocks, but I'm looking to invest in consumer goods or maybe an FMCG, which I'm lacking in my portfolio. So since this is a relatively older company and recently listed, so I'm looking to invest in Bectors.
And this is a long-term investment, I'm guessing?
Yes.
All right, let's ask.
Invest 2 lakhs, which is maybe in tranches over the next few weeks.
All right, let's ask our guests what they think of this of Bectors Foods and whether you should invest or not. Shahina, your thoughts on this one? He wants to invest around 2 lakhs in tranches over the next few weeks. Wants to add some kind of, consumer names to his portfolio, and this is what he's looking at. Would you suggest it?
Yeah, it's a good stock. It's got very strong brands, strong balance sheet, good growth also. The only thing that is negative about it is the valuations. It's extremely expensive. Given the size, it's much more expensive than its competitors. Like, for example, even Britannia. So to that extent, I would suggest buy it at dips. Don't buy it right away. Buy it at dips.
Okay, buy on dips for Bectors. Rajat, your thoughts on this one? It is trading close to its all-time highs, I think. What would you recommend? And do you think this kind of up move that we've seen in the stock is likely to continue? Essentially, does it make sense for someone to get in after this kind of run-up as well?
See, in 16 months, it has quadrupled from a low of 245 last year, June, to current price of about 1,090. It is more than 4 times. I mean, 300% appreciation has already happened in this run-up. And this is a parabolic run-up if you look at the weekly chart. But definitely, this is the return on capital and other things are pretty much good. But then I would say I completely agree with Shahina that this is a good stock, a good company, great company maybe, but it's not a great stock at the moment, given the kind of valuation it is enjoying. Wait, be patient. It will also come down because there are technical indications that over the period of next 6 months to 1 year, you will get an opportunity to buy it at least at a much lower level, say around 800 kind of levels. That would give you some margin of safety, because at the end of the day, what you pay is that actually determines your margin of safety. However great the company is, if you pay too high a price, you will suffer.
Okay, I guess Shahina and Rajat absolutely, agreeing with each other on that. Ronak, I hope that helps you as well. Both of our guests agreeing that you've done a great job identifying this stock, and it is a good one to have in your portfolio, but it is very expensive. It's run up 150% in just this year. So maybe if it comes down a bit and you can get it on a slightly lower level, that would perhaps be good for you in your portfolio. But thank you for calling in. The next query comes in from Rohit Jain, who writes in from New Delhi. He holds 30 shares of SBI at 160. So he's made good money here. He asks whether to continue to hold or exit at current levels. Rajat, I'm going to come to you because you said you're not very positive on the banking space. For someone who's been holding from these kinds of levels, do you think you would, book part profits, or what advice would you give to someone right now, considering that you said you're not too positive on the banks?
I'm not too positive on the banks for several reasons. I mean, if you look at the monthly chart of Kotak Bank, you will see negative divergences suggesting that some people are actually exiting the stock there. If you look at the State Bank of India, if you look at IndusInd Bank, if you look at HDFC Bank, State Bank is also showing signs of distribution. But State Bank will become quite weak once it falls below the support range between 520 and 480. Once that level caves in, there could be a sharp fall. But if I were in the shoes of the investor, I would have booked my profits here.
Okay, Shahina, would you agree with that advice, or what would you recommend on SBI? Because this is someone who's clearly sitting on very good profits and, has been invested for the long term. So I'm assuming they're willing to stay in for a bit. What would you tell someone on SBI?
Well, it is the best in its class of PSU banks. So you can continue holding. Credit growth is expected to be 13-14% going forward. And the focus of the bank is now going to be on improving the return on the weighted assets. So I think to that extent, things may look better going forward. So one can continue holding. It's just about 1.7 times price to book.
Okay, that is the call on SBI. I'm going to try to squeeze in one last query before we have to wind down. We have Kumar, who writes to us from Noida. He holds 100 shares of Hindustan Copper, which he bought at 100. Stock is currently at around 155. He also has 300 shares of Sadbhav Engineering, which he bought at 10 rupees. that stock has actually been seeing very severe cuts. He wants to know the future prospects of both of these investments. Shahina, your thoughts on Hindustan Copper? Is there anything else from the space that you would, like, apart from this also, please go ahead with that. And then Sadbhav Engineering. It's not a stock that we talk about very often, but he got in at 10. The stock is currently at around 16.
I think he can just book profits on both. He's, making money. And while Sadbhav is, in my view, definitely not a investment grade stock. At best, it could be a trading stock, loss making, very small cap, micro cap. So I would just exit, Sadbhav Engineering. As far as Hindustan Copper goes, I still, recommend a switch or a booking profits. Government holds 66% of the equity. Now, if you see copper prices have been coming down. Why to date, they are down still. And you see the last quarter numbers also were weak. So in the next couple of quarters, I don't see too much of a movement either ways. So I would just, exit and move on to some other stock or sector.
Okay, got that. Rajat, coming to you as well on both of these names, Hindustan Copper as well as Sadbhav Engineering. Take us through what how do you see these ones on the charts, and what would you recommend to someone who is invested in both?
See, Sadbhav Engineering, I would say that now that it is hitting circuits on the upside, it would be better to take to get out of it, because these kind of stocks which gives circuit every day for say 8 sessions, 10 sessions or something, when it comes down, it will also come down this way. So you would not get an exit then. So exit Sadbhav Engineering. Regarding Hindustan Copper, I would agree with Shahina for short to medium term, but those people who are planning to accumulate Hindustan Copper for the longer term. When I say longer term, actually I'm bullish for the longer term on basic materials, metals, minerals over the next 5 to 7 years. There, the technical chart suggests that there is huge accumulation, huge accumulation has already happened, and slow accumulation is continuing in it. So if you have a real long-term point of view, then continue to hold on. Else, I would go with Shahina that book your profits, especially if it falls below 150.
All right, very helpful advice there, Shahina. Rajat, on that note, we're going to wind down. But thank you, as always, for joining us and helping us answer all of these different queries that have come in. We're out of time on this edition of Your Stocks. But remember, if you have any queries, you can always email them to us, and we will take them up with our experts. We're going to wind down for now with the markets back above 19,800. Stay tuned. Closing bell is up next for the final hour of trade today.